Your mortgage payment just jumped by hundreds of dollars, and nobody called to explain why. Your lender decided you didn't have homeowners insurance, so it bought a policy for you. Expensive, written to protect them, and billed straight to your escrow account. Here's the leverage federal law hands you back. If your servicer strings together enough of these violations, RESPA lets you recover your actual losses, your attorney's fees, and up to $2,000 more in statutory damages. I'm Des Whitaker. This is Homeowner Rights Explained. Today, what force-placed insurance actually is, and the paper trail that makes them cancel it and pay you back. Explained. When your mortgage is escrow-serviced, your servicer is supposed to keep your homeowner's policy current using money it collects from you every month. If its records show that policy lapsed, cancelled, or never got confirmed, it goes and buys a policy of its own choosing on your house and hands you the bill. That's force-placed insurance, written to protect the lender's investment in your home, full stop. It typically won't touch your furniture, your electronics, your jewelry, and it carries no liability coverage at all. You're paying real money for a policy that functionally isn't yours. Explained. A voluntary policy gets underwritten. The insurer inspects, checks your claims history, prices the actual risk. Force-placed insurers skip all of that. They're contractually obligated to cover every property a servicer sends them, sight unseen, which is part of why premiums run 1.5 to 2 times a standard policy, sometimes far worse. And here's the twist. If you're escrowed, the servicer isn't supposed to reach for force-placed insurance as its first move. The rule requires it to try paying your existing policy out of escrow first, and only force-place if it genuinely can't confirm or pay for your coverage. Treat this like a checklist because each step protects the one after it. Explained. Step 1. Actually read the notice. It has to tell you why they think you're uninsured and give you a real deadline. Step 2 is the whole ball game. Get your declarations page, the one-page proof of insurance document any insurer can email you same day, and send it before that deadline. Step 3. Explicitly demand they cancel the force-placed policy and refund every dollar for any period your own coverage overlapped. The rule entitles you to both. Step 4. Check your next escrow statement and make sure that refund actually shows up as a credit. And Step 5 is your parachute. If they slow walk you, there's a formal complaint path waiting, and it works. This is the part most homeowners never realize they're owed. Explained. Before your servicer can charge you 1 cent for force-placed insurance, federal rule requires a first notice at least 45 days ahead of time, stating exactly what coverage it thinks is missing. Only after waiting at least 30 more days does it send a second notice, literally labeled the final notice, which has to land at least 15 days before it actually bills you. Those windows overlap rather than stack, so the earliest a legitimate charge can hit your account is about 45 days out. And if your servicer skipped a notice, sent it late, or charged you before those windows closed, the charge itself is arguably improper, regardless of whether you ever actually lacked insurance. A phone call where someone says, "Okay, we'll note that," is worth nothing if this ends up in a dispute. So skip it and go straight for paper. Explained. Call your insurance agent, ask for the declarations page, and most will email it to you in minutes. It lists your coverage dates, the dwelling amount, your address, and the insurer's name, exactly what the rule requires a servicer to accept. Make sure the DEC page lists your mortgage servicer as loss payee, because that's the detail servicers sometimes claim was missing. Send it however your notice tells you to, and keep your own time-stamped copy. Once it's in their hands, they don't get to keep debating. Here's the number to hold them to: 15 days. Explained. That's the clock that starts the moment your proof lands, and inside it, they're required to both cancel the force-placed policy and refund every premium dollar for any stretch where your own coverage was already in force. Not a partial credit, an actual refund, running all the way back to day one if your coverage was continuous the whole time. It doesn't matter that they already paid the force-placed premium out of your escrow. That's their accounting problem, not a reason to shortchange you. And once it posts, pull your next annual escrow statement and confirm it actually landed as a credit, not a phantom shortage that quietly raises your payment for a year. There's a specific letter that changes the dynamic, a notice of error. Explained, you're formally telling the servicer in writing that it made a mistake, and that starts a clock, acknowledgement within about 5 days, a real answer within about 30. I've put the one I'd send in the kit linked below. If that doesn't move them, the CFPB complaint process is free, takes minutes online, and gets forwarded straight to your servicer with a response deadline attached. Your state's insurance regulator is a second track worth using. New York and Virginia both take these complaints directly. Use both tracks, not just one. There's a real point where this stops being a paperwork problem you can solve alone. Explained, if your servicer blows past that 15-day refund window, ignores a notice of error, or you're looking at a shortage big enough to spike your payment, that's when a consumer attorney earns their fee fast. RESPA gives you an actual right to sue. Your real financial losses, your reasonable attorney's fees, and if the service has been sloppy across more than one requirement, up to $2,000 more in statutory damages for a pattern of non-compliance. You generally have around 3 years to act. Don't let a stack of ignored letters turn into a missed deadline too. So here's what to actually walk away with. Force-placed insurance protects your lender's stake in the house at an inflated price and does almost nothing for you personally. The law owes you 2 notices, roughly 45 days, then 15 more, before it can charge you a dime. The fix on your end is almost embarrassingly simple. Get your declarations page, send it in writing, and demand both cancellation and a refund of every overlapping dollar. And if any of that gets ignored, a notice of error, a free CFPB complaint, and your state insurance regulator are all real, working paths. Sources are on screen and listed in full in the description. This is general education, not legal, financial, or insurance advice. Notice timing, proof requirements, and refund rules can vary by your servicer, your loan documents, and your state. If a refund is ignored, your escrow shortage is growing, or foreclosure enters the conversation, talk to a licensed attorney in your state. Everything before that, you can start yourself. Send the declarations page, demand the refund in writing.